turn briefly to activities in Nigeria's fixed income market. Chuka Nwachukwu, Chief Dealer Group Head of Trading at UBA, joins us this afternoon. Good afternoon, Chuka. It's good to have you on the program. Chuka, we'll be looking at a lot that's happening in the fixed income market, especially with Treasury bills and the auctions, the DMO coming with, more auctions than planned. But we also saw a decline. Let's just kick off with liquidity. We saw a decline in market liquidity by 395.45 billion naira yesterday. How would you assess the current liquidity conditions, and what impact could this have on the broader market?
Thank you, Will. Good afternoon. The liquidity, like you rightly mentioned, has been pretty tight. Though we've seen, unlike the previous months, between January to March, it was very, very bad, in terms of liquidity. But April has not been so bad. So we, like you mentioned earlier, the system liquidity is a negative of over 300 billion. It will also be more affected again today because of FX settlements. However, we are hoping that respite might come if FAC is paid this week or next week. We might see a bit of respite. So that has actually affected activity in the fixed income market as well, because whatever happens in terms of in terms of liquidity, it greatly affects the fixed income market, either positive or negatively.
Okay, let's look at other drivers here for market, activities. We see inflation rates, the latest inflation data climbing for March, climbing to 24.23%, and this is the first monthly rise in inflation rates since the beginning of the year. And then we look at, you mentioned FX, but Nigeria's, the Naira's recent performance hasn't been so great. How do you see these economic indicators, especially influencing the central bank's monetary policy decisions for yields in the next meeting in May?
Well, we've seen the inflation figure increase more slightly. The last inflation figure came out at 24.23, like you rightly mentioned, from 23.18, and that's slight upward movement. However, if you drill down to the core indices, the food inflation, with somewhat give people a bit of hope, because it wasn't as bad as the previous month, and so that obviously tells that moderate decline in terms of food inflation is there. However, the core corporate, which is the FX inflation, is still there, as well as the fact that the oil price is also one of the major factors affecting the price of the rate of FX, and so we've seen decline in oil price, and this automatically will affect affect the market, because our major source of export is oil. So on the CBN, what CBN will likely to do, CBN has always maintained the stand of price stability. So in the last MPC meeting, all parameters were held. And so we thought that, going into the next one, which is in May, probably there might be a slight adjustment in the MPR. However, with this inflation figure that had just come out negatively, I think that we should wait to see what the inflation figure for April will be, and that way, it will be clearer what CBN we intend to do in their next MPC meeting, which is in May. And then I believe that if the figure is is an increase, just like in March, then CBN will probably respond, just as they responded in the previous months.
So you mentioned price stability. Do you think the CBN, that the central bank, will be able to achieve this, especially with the U.S. Fed saying that inflation may be tougher to control now, especially with the global tariff tensions? If we have instability in the U.S., especially with their inflation, how is that going to trickle down to Nigeria, especially that, our country is mostly we source FX. Mostly of our transactions, imports are done in the dollar. So how is this going to really impact yields in the fixed income market and in the markets in general?
I think that the tariff war, is also starting to have its effect in our market. If you've seen that, the last NTB auction, we saw that, DMO offered 800 billion, and then about 426 billion, 24 billion was sold. So you have, for once, we throughout this year, we've seen that the DMO is not overselling, or rather, sold exactly what they offered. So that's an indication that, some of these things is going to be affecting our market. So for the fixed income market, going into the Easter holiday, we've seen a lot of activities on the longer end. That was the 1 year. The 1 year came out at 19.63. It's currently trading around the 18 levels, and then lower, upper 18, and then lower 19 levels. So it's going to trade this way till after the holiday. On the bond side, we've seen interest in the 2029 bonds, as well as the 2033 bonds. So these are the two bonds that investors have greatly shown interest in. And so we've seen that the yields on these two securities have actually declined slightly. And so the effect, obviously, is the tariff war is affecting the economy. And then also, don't forget that the another negative effect on this tariff in our economy is the fact that prices of securities, for example, will also be the tariff, which is, I think the U.S. government placed about 14% tariff on Nigeria. So that investors will also factor that into investing in our market. And so gradually to have effect. We've seen the effect also in the oil price. This also will affect demand on the FX, because if we're not if the oil prices drop from $77 to about $55, then obviously it will affect our input. Don't forget that we are not even producing enough. We're meant to be producing about 2.2 million barrels a day. We're currently producing less than 1.5. So all these factors will continue to put pressure on the naira. However, I must say that the CBN has greatly intervened. They intervened throughout last week. They've also intervened this week. That has also helped to moderate the demand, and then we've seen the exchange rate remain stable between 1,500 to 1,600. So by and large, all these factors will definitely affect our market going into the Easter holiday and then after.
Okay, speaking of Easter holiday, today is final trading day. What instruments are investors looking at currently?
Yeah, like I mentioned earlier, the 1 year, which it came out at 19.63, is currently trading around the upper 18 level. So that's on the treasury bill side. There are also some interest on the OMO side as well, but the major interest so far this week has been on the 2029 bond and then the 2033 bond. So those bonds are quite lucrative, and then investors are also looking to to take advantage of the high yield now, because after this period, we'll begin to see decline in yield, and obviously that will affect investors' demand and then investors' appetite.
We would not want to see that happen, but it's the market. Thank you so much, Chuka Nwachukwu, Group Chief Dealer and Group Head of Trading at UBA. Thank you for joining us this afternoon.
Thank you.